CFI, the complete guide to trading. Advantage of investing in ETFs. There are many advantages to investing in an exchange traded fund, including cost benefits. ETFs usually offer a significantly lower expense ratio than the average mutual fund. This is in part because of their exchange traded nature, which places typically costs on the brokers or the exchange in comparisons with a mutual fund, which must bear the cost in aggregate. Accessibility to markets. ETFs offer exposure to asset classes that were previously hard for individual investors to access, and provide investors with the possibility to own assets which such as emerging markets, bonds, gold bullion, or cryptocurrencies. Because ETFs can be sold short and used to apply other more sophisticated investment strategies, they represent a broader range of opportunities for investors. Transparency. Hedge funds and even mutual funds operate in a not so transparent manner as compared to ETFs. Hedge funds are and mutual funds usually report their holding only on a quarterly basis. In contrast, ETFs clearly disclose their daily portfolio holdings. Liquidity. Because they can be bought or sold in secondary markets throughout the day. ETFs are extremely liquid. This is in contrast to mutual funds, which can only be bought or sold at their end of day closing prices. Tax efficiency. Generally, ETFs poses a major tax advantage over mutual funds for two main reasons. First, ETFs reduce portfolio turnover and offer the ability to avoid short-term capital gains that incur a higher tax rate. Second, ETFs can overcome rules that prohibit selling and claiming a loss on a security if a very similar security is bought within a 30-day window. Potentially drawbacks of ETFs. Despite the aforementioned benefits, ETFs encounter some challenges as well. For instance, they provide higher exposure to previously unattended asset classes that could bear risk that equity investors may not be familiar with. Some sophisticated examples, such as leveraged ETFs, involve complex or unfamiliar portfolio structures, tax treatments, or counterparty risks, which require clear understanding of the underlying assets. Additionally, ETFs carry transaction costs that should be carefully considered in the process of portfolio creations, such as bid per ask spreads and commissions.